Welcome to week 52, which is the last trading video in this Trading for a Living series. And I can't believe myself that we're actually there. And for me, this was my journey trying to match the average American of making $53,500, but also from a YouTube perspective of posting consistently every single week, being accountable, coming back and showcasing you the results, whether they are bad or whether they are good. I wanted to come back and show you guys that it is possible to make money online trading and doing it consistently. Yes, I do have open positions which are in losses, but I'm managing these kind of positions. And what I wanted to do in this video is walk you through how I would roll and what strikes I'll roll to on my current Coinbase position, because that's a good example of a position that has gone slightly wrong. Coinbase has rocketed, has doubled in like 1.5 months. So my strangle is in the money and what I would do to roll this into the next cycle, because today, which is week 53 in technical terms, I'm shooting this video on a Friday, is 21 DTE, where I will be rolling all of these positions out to the next cycle. So I'm going to walk you through the process of how I would do that live inside this video. So going over week 52, I made $838, which again is behind target, but I already beat the overall target back in week 49. So I wasn't too fast. So I didn't want to add or take on any more risk here. So I wanted to make sure that I had a position that still gave me enough money and was still profitable overall. So making $4,000 on top of that. And if we look at the hours, this is the bit I want to focus on here, is we 2,000 hours inside the day job, 28 hours trading. And I say this every week, it takes me longer to create these videos and edit these videos for you guys than it does for me to actually place the trade. So in 28 hours, making 57,000. I'm really interested now in terms of what is the hourly rate. That's $2,000 an hour is your average wage on a per hour basis to achieve this result. And it's not only the $2,000, it's more and again, I've said this before, if you've got a $10,000 or $100,000 account, the logic is still the same. You're just trading different stocks that are lower in absolute value and you're bringing in less premium relative to your account size. So in terms of scaling, it's the same effort in terms of pressing the buttons on your mobile or on your computer. It's just the scaling is the more money you can put in, the more money you can get out. So again, we don't need to go through cumulative because it's all here really. You don't really need to look at anything else. It's just this bottom line now for the first time. So let's quickly go through the trades that I went through for week 52. Let's do IWM first, because then we will look at Coinbase. So IWM, I had a strangle position on, of which the call, let's just put it up so you guys can see. I don't even know why I'm trying to explain it when I can visually show you guys. So I had the 187 call and 177, let's get rid of this, 177 put. And what I did was, as my call strike has been tested, I have rolled up my put side to the 187 straddle. So I'm at a straddle position now. And like I said, today is 21 DTE. So what I would do is, I reckon I can comfortably roll this position up to a 190, 192 potentially for a credit. So I'll roll up the position, my call and my put for a straddle or a credit, which again will increase my break evens and reduce my risk slightly because I'm pushing up that call side up there. And again, I'll be looking at what I would do in this example, so you guys can see, is look at where the pivot levels are. IWM has hit all of its pivot levels. And again, here's a perfect example of a pivot level that's missed. And then the week after, it goes and crosses through that pivot and comes back to the current week's pivot. So I would expect at some point IWM to come and hit the 189 level. So maybe a 190 straddle probably looks about right. I can probably generate a decent amount of premium for placing that trade in the hope that price does go down around that level. And then at 21 days later, I would then go and try to widen out the strikes as best as I can to put this back as a traditional strangle. So that's how I do it. And what we'll do, we'll go through Coinbase now, which will be a more traditional example, or more of a worse example to walk you guys through. So what I did here is I rolled up my put from 80 to 75 to 80. So I've got a call here that is sitting at $70, which you can see here is way out of the money. Coinbase rocketed again. It doubled from lows of 46 all the way up to, what was that, 113. Ridiculous. And it's come back slightly, which has helped me. So again, I don't roll. The tested side 70 stays where it is for the current cycle. And I had the 75 puts, and I rolled that up for a net credit of 644, and IWM was a net credit of 174. So that's what gets me the 838 for this overall week, for week 52. So what I want to do to end this series off is just walk you guys through it. I'm parking, trying to make money. Let's just look at this one position in isolation. We have the 80 put, the 70 call expiring August 17th. Today is the 28th of July. We're at 21 days day till expiration. What I'm going to roll this, or I'm going to show you that my thought process in terms of strike selection in rolling this position out to the September cycle. So what I'm going to do is I'm going to bring up tastytrade, because Tasty is really easy to showcase this type of work. So if we look here, we've got the 80 and the 70. So we're in the August 18th. We are buying back the 70 call. I believe it's 70 call and the 80. So again, that is just, we're buying those back. We're going to buy that back. Remember, this is a contract, but let's just park that for 1 second. We are buying this back for $2,890 per contract. So what we want to do is we want to go to the September cycle. Like I've always said, I've changed the way I've been trading. Instead of doing weeklies and things like that, I go out to the monthly cycles and roll out the position 21 days before expiration. So you can see we've got 21 days left of the August expiration, and we want to go into the next monthly cycle, which is the September cycle. And any cycle that has a W against it, will look different in different platforms, is a weekly cycle. And you can see all of these are all the monthly cycles for the next X number of years. So if we go out to September the 17th, and if we have a look at the chart here, I'm still fairly bearish to flat, right? We've hit the pivots. We've got a missed pivot over here. So what we want to do is I want to try bring this call up as far as I can for an overall net credit. So if I go back to tastytrade, or are we now here just having a quick look again, 70, 80. If we go for the 75 call, so we're buying back the 70 call, and we are selling the 75. So we're increasing, we're getting closer to the share price of, at the moment, $94.81 by $5. At the moment, if I just did that, it would be a $4.95 credit. So if I look here on the put side, I can probably go to the 80. So that trade will get me mid-price around $15. So it's basically a scratch or a break-even trade. And I'm not adding any additional risk, because the August, I'm already at $80. So I'm keeping the put where it is, and I'm decreasing $5 of risk. So I'm getting back $5 in intrinsic value, and I'm getting paid $17 to do so. Because if I remove this leg, it's saying that it's going to cost me $4.95. And the reason why it's not $5 is because the delta on this is not at all the way at 1. So it is flowing around. You'll get somewhere between $4.66 and $4.95. So you can probably do this around $480. So I'll buy this back for $480 to roll up by $5. Right? So therefore I'm basically synthetically making a $20 credit by placing this trade. But if I add in the put, which then covers the cost of that, is with no additional risk because it's already there sitting at 80, I can make $18 and get $5 in intrinsic value. So this is how you defend positions to be able to get a better position on this trade. Now, what I can do is I can go to the 85 and potentially, okay, I have to go to the 90. So I can roll this up by $10, add more risk to my put side for a $77 credit. Now, would I want to do that? Probably not, because I'm probably more bearish than I am bullish on Coinbase. So therefore, I can't really do much adjustments if the price drops below 80. My best place here is to, and again, this is keeping the inversion in there. My best case scenario is at 21 days from the September cycle. So what's that? In 28 days time, my best case scenario really is for Coinbase to be at around the 85 mark, or somewhere around between 85 and 80, which then what I would do is for the October cycle, move out to a traditional strangle, and I should be able to do that for a credit. But there's too much risk there for me to be able to do that move, where I actually prefer, because I am slightly more bearish than I am bullish on Coinbase, just because it's such a big run-up. And also is they do have earnings coming up on August the 3rd. So that's the other thing that you've also got to realize when you start rolling positions, is that I'm rolling into an earnings period, because I'm rolling it now and I won't be rolling until 28 days away, which is after August 3rd. So this position is going to be there through earnings. And for those who know Coinbase is very volatile. It can go up or down plus or minus 20% in a day based on that move. So I rather leave myself a bit more gap for Coinbase to drop. If Coinbase rises, and now you gotta look at the situation. If Coinbase goes down, that is what I want. I want Coinbase to go down. And the closer it can get to 80, the better this October roll would be. If it goes up, again, what I have got, I can just keep rolling my put up and keep generating more premium. So I hope this video is found you useful. I really appreciate you guys coming onto the channel. Make sure you like and subscribe, and there's new content coming out very shortly, which is more live trading, replacing trades for you, so you can see what I get filled at and why I've done things in more of this kind of Coinbase type of interaction. So I really appreciate that, and I should see you guys in the next video.